Hi, I'm Chris. I'm a personal tax director at BKL, and I frequently speak to individuals regarding personal tax matters on cryptocurrencies.
Hi, I'm Sam. I work within the tax consultancy team at BKL, and I work with individuals and corporates looking at tax planning and maximising strategies to make sure the tax is minimised.
Hi, I'm Alisha. I'm an audit manager here at BKL. I work primarily with owner-managed businesses as well as larger corporate entities in the crypto space. I've seen companies where they don't even have a bank account. They use purely cryptocurrency as their own so-called currency within their business. How do you then plan for, paying your tax bill in 9 months after the year end? And these are all things that we don't want to create nasty surprises with short notice. It has to be something that's kept on top of on a regular basis so you can plan for this sort of thing.
Sam, some of the clients I deal with, the individuals, they're sitting on quite substantial portfolio values now. And frequently they will say, well, what can I do? What going forward, what are my options? What can we suggest to these guys?
I think that it's a key point to remember, I guess, is that capital gains taxes are lower than what corporate taxes are going to be. They're going up to 25% from the 1st of April 23. So they're still at 20% for individuals. So if you're realising gains on cryptos, it's still best to do it as an individual. For the time being, I'd caveat that by going, we don't know what's going to happen in the future, and the government have been making noises about increasing capital gains tax rates. So something to think about. But in terms of diversification, what we're seeing is people are either selling out the crypto into fiat and then investing in property or equity portfolios, or they're taking loans out against their cryptos and doing exactly the same thing. So diversifying that way. And I suppose the next question on is, what's the most tax efficient way to do that? There's two ways. You can either do it as an individual, or you can do it through a corporate entity where you're lending or putting share capital into a company. It depends basically what your income is on a personal level. If I keep thinking the line is about 100k, and that's where you start losing your personal allowance. And what you need to be mindful of is doing it through a corporate, you get taxed at corporate tax rates, but you start creating a pot of money in a vehicle or in a corporate entity rather than having it in your own name. So it depends on how much you need to live on and a number of different factors, but it's possible. So Alisha, let's say I've just set up a company which has got some cryptocurrencies in it. What are things I need to be thinking out from an accounting and general looking after the company point of view?
Okay, so in terms of the basics, do you have a bank account? Or is that in the pipeline at all? You need to be thinking about your bookkeeping and getting started off with good habits in terms of the record keeping. That would then help with all the year-end compliance work with regards to the accounts, the tax, and then also just the ongoing compliance throughout the year.
At least banking and new crypto companies, we've said about setting up a bank account for these guys. It must be difficult, because I don't think banks like them.
I get asked this question all the time. Banks tend to run a mile from crypto firms. We do have various solutions to this problem, as it is a problem to most people and most clients that we come across. But there are solutions out there. So Chris, I've got some mining income. How am I going to be taxed on that?
Well, you're performing a task and you're receiving something for that. So you're carrying out the mining and you're receiving crypto for it. So broadly, you're going to be subject to income tax on that income. Whereas before we've spoken about capital gains tax, we're now on income tax rate. So we've got our 20, 40, 45% rates and national insurance to consider as well. So that's on the individual side of it. Now, we're frequently seeing people that are putting their mining income into corporates as well now. What's the advantage of doing so, Sam?
You're going to be taxed at corporation tax rates on that mining activity. So 19% at the minute, going up to 25% from 1st of April 2023. So yes, there's a tax saving there initially, but you've got to think about what do you need to live on money-wise. And if you're taking money out of the company, you're going to be taxed at dividend tax rates. So there are tax savings, but mostly in the leaving money in the company point of view. So Chris, I get a number of clients coming to me saying they made an investment a few years ago in a cryptocurrency and have now got £250,000, £500,000 worth of the cryptocurrency because the value's gone up so much. How's that going to be taxed and eventually go from one crypto to another or to fiat?
Well, individuals have to consider initially, they need to make sure that they're aware of the rules. And as you said there, crypto to crypto is a chargeable event for capital gains purposes. So therefore it's subject to capital gains tax. And that point is frequently being missed.
So Chris, let's say I haven't told HMRC about any of the gains I've made for the past 5-6 years, and have only just realised that I should have paid some tax. What do I do in that circumstance?
Don't bury your head in the sand straight away. I think come and have the honest conversation with us. It's not, the revenue won't send you to prison straight away. No, in all seriousness, I don't think it's a very easy resolution. We can look and see whether you do actually have a gain. There's a misconception straight away. When you apply CGT rules, it can mean there's not a gain. So we'd look at that initially. And if there is, we approach the revenue via disclosure service. So it's quite a formal arrangement, and we can help with that. It's not we take the burden off you as an individual.
So guys, we've seen more and more NFTs emerge in the market over the last few years. Is that income or capital? What's the tax implications on these?
First starting point is whether you're a creator or not. This is generally, as we come back to previous question that we've answered, if you are doing something in return or if you are putting something up and generating. And in this instance, would be generating an NFT, if we are generating an NFT, then it's going to be subject to income tax. And normal rules as if income tax rates, etc. If we're trading on an NFT, then we're not a creator, we're trading and we're essentially under separate rules, broadly.
And I guess you could say as well that VAT issues with NFTs are all too often ignored because people equate them to other crypto assets which are exempt for intents and purposes with VAT. But it's not quite the same with NFTs, is it? So
yeah, they don't see it as a trade and therefore
exactly.
Potentially subject to VAT.
Yeah.
And I think the big point is that we do make sure we take a step back, whether that's from the accounting or the tax, really understanding what's going on, taking the time to really get to grips with it, and then making sure the right legislation, right accounting rules are really applied to the individual situations.